You are listening to the Theory of Thing Investment Podcast, brought to you by Wakey Wakey. Thank you very much, Wakey
Mm.
Wakey, for all you need in all that you need. And this is the amazing Christmas special. I'm James Whelan, Managing Director of Barclay Pierce Capital's Wealth Management Team, and I'm joined by Heath Moss of HLM Investments, a good friend. Merry Christmas to you, Heath. How are you now?
Merry Christmas. Merry Christmas, James, and to all the listeners. I'm very well, very well getting pumped going into Christmas. Great time of the year. Probably my favorite time of the year. Yep.
Oh, it's up there. It's sort of a hazy time. What I hate is at this time I've actually still got stuff to do, and trying to ask other people to do the bare minimum is like seems like you're in some way insulting their religion. It's
Yeah.
just like no, guys, we're still going all the way through. Anyway,
People check out.
my team is amazingly good at staying at it, which is all right. But
Beautiful.
there's only so much that you can ask people, at certain times of year for that sort of thing. I'm
Yep.
going with this. With the multivitamin in it. This is the orange one
Beautiful.
that I'm going for here. All right. Thanks very much to everything the Wakey Wakey people helping us out there.
Cool.
Yeah, fantastic. Can you hear me okay?
Yeah, yeah, you come through loud and clear. Loud and clear, unfortunately.
Yeah, thanks, mate. It's been a crazy couple of weeks. I've just been doing so much, hitting the gym a bit, which is great. Really working on
Fantastic.
doing a lot of core stuff. I got in there this morning,
Hmm.
and not to talk out of school. So, yeah, I want to say that Laurie Daly is also in my gym. That is there,
Yep.
and he's just been named the New South Wales head coach again,
Okay.
um, as he was a few years ago, and they've put him back in
Yep.
now with the other bloke picking up another job at Brisbane, and yeah, I've seen him in that gym in the lead up to him being announced and following it. He is working his behind off.
Mm.
More than he's the only person in there more than me, I like to say.
Yep.
So yeah, New South Wales going 3-0 this year. I guarantee, absolutely guarantee you they will.
3-0
Um,
in 2025, eh?
yeah, mate. Yeah, it's gonna be
Are,
good.
are
It's gonna
you
be good.
you one of those gym goers that, you films yourself, put yourself up on TikTok, etc.?
I do actually a little bit because it's part of
Yep.
the just sort of part of the branding and sort of part of who I am of that we are working hard at certain things this year.
Yep.
I've changed the theory. I've got a motto. When I started here, the first thing I did was put up the believe sign
Yep.
over my desk. I took the job out on the floor. I didn't take an office out on the floor. I'm with the guys. I want to hear what's going on. I want to get the buzz and also be a part of them and help them and be a part of, and also calling clients and everything that I did when I first joined here. And I had the believe sign. We had to do a lot of things. Had to turn it into something else. It's building a full wealth management offering,
Yep.
more than they had, and that was sort of the belief thing. I wanted people to believe that I knew what I was doing and follow me into this fire, and they did, and it's fantastic. And then the other day, I've moved the sign, I've changed it from belief, and I've put up a new sign. It's the motto for 2025 is going to be no passengers. So that's sort
No
of the the,
passengers.
the, the direction that we're going. If you just want to hang around, if you just want to watch from the sidelines, you don't get to be a part of it. We are all driving this train. So that's sort of where I'm going with that. And so a big part of that is, hey, it doesn't matter if it hurts, it doesn't matter what you're going for, but making sure that you're fit enough to be able to tackle that year is a part of the brand. So that's what that is, mate. So it's gone from belief, and so I thank the team. And I wrote this in my note on Friday last week. Just I thank the team for believing in me. Clear eyes, full heart, can't lose. And we did that sort of thing. It was fantastic,
Yep.
and now it's just moving on to the next stage of yeah, of us really driving this thing hard and being able to get this offering that I've managed to build out to as many people, which is great. And I'm really
Fantastic.
looking forward to it. It's going to be a hell of a challenge. This job is the biggest challenge of my entire life. It's everything that I've done has worked towards having this gig. Um,
Mm.
I don't take it for granted, and I think the clients and the team relate to that. Anyway, so how
Yeah.
have you been going, man?
Yeah, good. I'm still really, really busy with a lot of client work, just mundane stuff, Markets were looking fairly boring there for a while until the other night, but and a bit of action picked up. But yeah,
Oh,
just had a chat with another advisor, sort of using him as a mentor to sort of help grow my business and
right.
learn from him and how he did it. So
Cool, cool.
trying to do that. So I'm going to expand out more into superannuation and that sort of thing. Offer more services around that moving forward
Mm.
as well.
Is that
So that's
giving super advice, like as in people helping people set up their SMSFs,
or not
or
not
is
so
it?
much construction and setting up self managed, but existing super and strategies around that. Moving into retirement, etc. Because it's
Gotcha.
basically my client base is at. They're all 40 to 50 and up, and coming up towards retirement. So you got to plan for that. And I've been authorized for forever, but I've just been so busy with investment work, etc., that
Yeah.
I've never really done it. But it's good way to expand my offering and expand my business, etc., moving forward. So
Is
try
that
and take that
yeah?
next step.
Which is great. Are you going to tailor or sort of? Are you going to move it to more of a passive investment portfolio then, so that you can handle more of the workload on super advice?
Yeah,
As
I
in
think.
just less of the
Yeah,
stock picking, just more of the okay, we're just going to put in a 60-40 sort of situation.
yeah, I think I can still do both, but I mean, most of my clients are conservative, long term investors anyway. So there's not much in terms of outside of rebalancing and maybe removing one or two stocks every year that we do, because they're all in it for 10 years plus. And
Yep.
so it's more just keeping an eye on in case something happens, or there's a sort of a major COVID style thing, and there's an opportunity there. Because I see myself I'm a portfolio manager, but I'm also an asset manager. So making sure you got your Australian equities, international equities, gold, property, and all that balance perfectly, that fits around your risk profile and your goals properly. Is that and but I think with the moving into super these days, it's a lot easier with your hubs and net wealths and that out there. These platforms that do so much for you and make the management of that sort of thing so much easier. So things are getting easier for us in terms of management. I think I'll obviously still keep my direct equity side of the business and still build
Yeah.
around that, because there's still a demand for that. A lot of clients love direct equities, Australian equities, but
Yeah,
then
they
there's
do.
those that are just happy to sit in a SMA or something like that.
That's I've
And
got 'em-
yeah,
I've got those people as well, and I like
yeah,
being able to offer both of those things to
yeah,
people.
yeah,
I've made it. I'm on the record though. I am the worst stock picker. I could. You're great at it. You could go, okay, so
mm,
ResMed here, and I know the intricacies of the whole thing. I'm just
yep,
like,
yep, yep.
I I could do it, but that would take up 90% of my time.
It
I just don't
does.
have the natural affinity for doing it, and and it should too,
Yeah,
which then means that you don't get to talk to clients as much, build your business as much,
yeah,
manage advisors, because I actually do manage, as opposed to just come on in and then leave,
mm,
and I don't really do anything. I actually treat it's actually like a team. We have KPIs. I have discussions with them one on one, cultural, team building, that sort of stuff that I do with people here, because it's
mm,
just a stockbroker, right? It's a family.
yeah, yeah, and
There's no way that I'd be able to know if ResMed was going to go up or down at any particular time, and be able to do all that stuff as well.
it's going to go up.
Sure.
No, I think, and also being in the industry for over 20 years, I've got that list of stocks that I know are high quality stocks that are going to give us excellent earnings growth over the longer term, and
Mm,
have little moats around their business, etc., that I can
yeah.
chuck into a portfolio that I'm not really going to have to worry about. I can
Yeah.
check in on them on earnings, or if we get a sell off, a correction, I can grab some more, etc., for clients. But yeah, it's more less about trading, more about management, portfolio management, and asset management these days for me. And so that's why I
Yeah.
think I can move. I've got more time to move into superannuation, and I can even do risk as well. I'm authorized for that as well. So yeah, that's
Really?
that's
Oh,
me. Yeah.
oh my God, the margins are insane in
Mm,
insurance.
I
It's
know.
insane in
Not what they
insurance.
used to be. I remember when I
Still,
first started doing it, I was getting the commission was like 120% of the upfront and 110% trailing or something like that. It was
yeah,
ridiculous. The
yeah,
wound right back. But it's just, I mean, you got superannuation. Most people have got insurance in there as well, so you can manage that as well. So, going for the more full package in 2025, and I think that's a good thing about this time of the year. You can reflect, look upon your business and what you're offering, and you can get a little bit excited about what's to come. I think it's going to be tough to build it. I mean, I've got an existing client base to use that on, but getting new clients through the door is tougher. But I've got those referral networks and that I can use. So, yeah, very exciting stuff moving forward, I think.
mm,
Mm,
that's
mm.
true. That is true. Mate, just go straight in. So I've just got, obviously, because it's a Friday. Today's date is Friday. I don't have any stuff in my hair. It looks terrible. I just came out of the gym, had a shower. I didn't put any schwutz in my hair. I've got this dry
Shoots.
hair thing going on. It's the 20th of December, 2024. we're in the closing stretches of the way home.
Hmm.
The Dow, and now I don't know what the Dow did last night because
Up a smidge,
yesterday,
up a smidge.
yesterday was our office Christmas party, and I was up late hand feeding the dog. So the Dow was up. Before that, it had 10 consecutive down days, which is the most since
Yep,
1974.
yep.
Absolutely ludicrous.
Ludicrous.
But Heath, you go into it, mate. I'm going to pull up. I've got some overnight notes that are in here that I'm just going to yank up as well. But you launch into it, okay?
So yeah, there's a Dow. You can see that, and maybe that was the precursor to the rest of the market selling off. Dow had been, like you said, 10 sessions of negativity, up 0.04% last night. So technically broke that down streak, but it's filled that gap there. There was a little bit of a gap there, so it's filled that. But we don't really care too much about the Dow, given it's only the top 30 companies. We got the SPX there, S&P 500. You see that massive down day the other night from the Fed. We'll speak about that in a moment. Up, or is it down? Oh, down slightly last night. It was up around 1% during the session, but it was unable to hold on to those gains, unfortunately. And that was the story with the Nasdaq as well. So we've seen some softness in the US bourses overnight and the last 2 nights, especially on Wednesday night. But that all came about because of the Fed and their commentary. They met the other day and they cut by 25 basis points, which was fully expected by the market, but it was the commentary surrounding that. And I've just got the 10-year note or 10-year Treasury note yield up on the screen here. You can see the massive run we've had there in yields. We did get, it went up to about 4.5 and then came back down to about 4.15. Now it's back up to a 4.55 again percent on the yield. And that's all because Powell came out and basically said, look, we recognize the US economy is doing well,
Yep.
and it's obviously going to be more gradual next year. So since they started cutting in September, they've been, more and more cuts for 2025 have been taken off the table. And now we've only got one full cut priced in. I think it's 33 basis points priced in now. For 2025. And that's because Powell made comments like they want to see more progress on inflation. Now, that's the first time he's sort of mentioned inflation in that sort of way in the last 3 months. But it's been about jobs and supporting the jobs market. But he sort of did a mini pivot and went back to inflation, the inflation story. Because we have seen, it be a little bit stickier than perhaps they would have liked. And we have the major PCE inflation data out tonight. And if that's hotter than expected, then I think equities would take another tumble.
Yeah.
And that one full cut may not happen. But
Really annoying. I mean, I've got some great notes here that I'm just going to pull up
go for it.
for you. Hang on, so because I know this because obviously because I'm a complete fool, I email them to myself along with the other 8 billion emails that I get every particular day. So now I just got to find it, an email from myself. Oh, these people. It's notes. Yeah, no, it's gone. Doesn't matter. Okay.
Yeah.
Sorry, mate. Go on.
No, go for it. Yeah, so focusing more back on inflation again, and that spooked the market.
I reckon there is.
Yeah, and that's why we saw that sell off. And given that the market and the multiples the market is trading on, I've said for a while in my notes to my client, it's not going to take much for a quick 10% sell off, which has the potential here. I think all depending on tonight's inflation figures. But it could go either way because last night's market, whilst there wasn't follow through selling, it wasn't convincing at all. Those gains were not held on to, and so we've only got one full price cut into the markets next year. We had the BOE meet overnight; they held. The Bank of Japan held as well, and there's potentially for hikes to be pushed out there, and that's seeing the US dollar spike. That's had a really strong week of 1.3%, I think, up. And you can see there, where are we? That's going back to September last year. Yep, that's September last year. So we're higher than that now. So we're the highest we've been since around November 22. So the US dollar is really rallying on the back of this, and this is again a headwind for earnings because 40% of revenues in the S&P 500 come from international sources. So a higher US dollar is a headwind for that and hinders earnings growth. Because obviously the big tech, someone like Microsoft has 50% of their earnings come from overseas. So this can sort of play into it. So there's sort of these little things. I'm not talking anything major or a major sell-off or crash or anything like that, but maybe a little bit of a correction coming through where, that equity risk premium, as Westy put it, needs to be repriced moving forward. And we could see a bit of a pullback in some of those big names. And but I will say, I think the market is getting too hawkish. I feel like there are signs, especially in the Q4 data, that the US economy peaked in Q3, and we saw that GDP figure from last night revised upwards to 3.1 from 2.8.
Mm-hmm.
And I think we're starting to see the market become too hawkish because there's some signs in the Q4 data that we're seeing, especially around jobs, around quits rates, the fact that the US government is such a big contributor to those jobs figures. Like the private market really isn't hiring in the US, much like here in Australia, it's not really hiring. And it's all, government related industries like healthcare and schooling, etc., that are hiring. And we've got Trump and Musk coming through next year, and they want to start cutting. And I don't think we're going to see them hiring much at all for the government. I think, especially to start off with, they're going to put a halt on most of the hiring. Because Musk tweeted the other day, he said he showed a graph of school assistants versus teachers in schools now over in the US, and assistants has gone vertical, and he wasn't happy about it. So those sorts of things, I think they're going to start trimming back or halting, and we're going to real see how the jobs market can stand on its own 2 feet to start with 2025. And I think it's going to be a little bit ugly to start with. Just my own opinion. Nothing major, but we're not going to get the plus 200K jobs added in Q1 and Q2 moving forward. I think those government related industries are really going to pull back. And
I think they are too, and I think that the amount, it's exactly what you said. That the amount of jobs that they have been providing and the amount of GDP. I honestly I agree with the policy on this one that there is too much dependency on the public service as being a source of GDP growth and a source of growth. It's just like you're spinning your own wheels or something like that.
Exactly,
it's difficult to describe.
We got the same problem here.
Yes. I've got some charts here too.
Go for it. I'll stop sharing.
Okay, you can see that.
Yep, I can see it.
This is the seasonality that comes from Carson, he's always amazing at. That's Ryan Dietrich. At Carson Investments Research, and that's the Santa rally comes later and later in December, as it does seasonally speaking. It's usually around now, 17, 18, 19. That's where it starts to go, and it puts on 1.48%. That's over the last 73 years of the S&P 500. China's financial conditions easiest since June 20. Look at China. The Chinese yields are just crazy low, getting dumped for a reason. Because they just can't pull themselves out of this out of neutral. Or
I think people
can't get themselves out of third gear. I suppose is probably what I'm saying.
I think people are expecting too much too soon. It takes a little while for these policies to filter through. They've got problems with the consumer, and I think that will be their focus in 2025. I've got real confidence they will get a strong economy going again. Their language they're using.
I agree.
The language they're using is very, very different to anything they've used since the GFC. They recognise the problems there, and they just don't want to throw money at the economy for the sake of throwing money at it. They want to pinpoint, their trade-in programs with their white goods and cards and stuff like that. That's really smart, I think. Getting rid of old, outdated appliances, etc., bringing in new stuff for consumers, encouraging consumers to spend that way. I think that's great. They will have to support the consumer more next year, especially if Trump comes in really hard with tariffs, because then their export markets will get hit. But
I think that tariffs are going to be overblown, and I think it's just going to be threatened, but not actually been done anything like that. And I think it's going to be. Too many people forgetting what Trump does. He's more of a I'm going to do this, and he doesn't actually have to do it. Very rarely.
He's a transactions guy.
Bring something in. Yeah,
he's very negotiator. He'll put out his worst case scenario. He'll put it out there in the media for everyone to see, and then they negotiate down from there. And he already, like, I think at the start of the year, I think he said, "Oh, I'm going to put 60% tariffs on some of China's goods," and he's already backed away from that. He said 10% is what China we're going to add to the existing China tariffs, which really, And last time around, I think I said it last time on the pod. Last time he put tariffs in, currency movements accommodated for that. The US dollar appreciated 15%, and the effective rate of the tariffs he put on was 17%. So he based that the currency basically nullified it, and
Yeah.
the US consumer didn't feel it. Treasury picked up extra revenue from these tariffs, and it was the Chinese consumer that paid for it because they had less borrowing power. But actually, this time around, it could be beneficial for China because if they whack on tariffs and the same thing happens, and the Chinese consumer has to pay higher prices, that's probably good thing for China because they've got a real deflation problem at the moment. So if
Okay. Yeah, that makes
prices move
sense.
up,
Okay, I can see that. Yeah.
yeah,
Yeah.
prices move up, then that helps them out a little bit.
Yeah.
Mm.
Okay, so we are still going on with this one. I think that China will, but what was amazing is that remember when the first stimulus thing came out and China absolutely pumped, like 7-8%
Yeah,
day. That market has left all that on the side now. That's all
yeah,
even back out again. So
yep.
it's going to be. I don't know how many more times I have to hear China stimulus, China solve, get involved. It's going to be okay. And as I joked, if I had $1 for every time I got China wrong,
Yep.
we'd be having this conversation on a boat right now. So it's
Yeah.
yeah. Chinese car production share from 1% to 39% over the past 20 years. That chart
Phenomenal.
is phenomenal, isn't it?
Mm.
Europe, but just what are you going to do with Europe? Hey, the whole thing is just absolute toilet.
It
You
is.
know, it's just going backwards. It is a anyway. The less you
Yeah.
live on that. Chinese, you put this on the. I think you of West. You put this on the chat.
Yep.
From Javier Blas. Fantastic follow on Twitter as well. Chart of the day: tweet China mined a record amount of coal in November, surpassing the
Yes.
previous peak set in early 2023. Despite a large deployment of solar and wind, coal remains the backbone of China's electricity system, with coal-fired generation set to hit a record high in 2024. I can imagine that nuclear is going to be coming up pretty
Mate.
pretty strongly on there as well.
They announced was it last week or the week before that they want to triple their nuclear capacity and have it at 150 gigawatts by I think it's 2040 or 2050. It's probably
Outstanding.
2050 actually. And like Australia's own electrical grid, I think it's only 20 to 30 gigawatts or something like that.
Yeah,
So
yeah, yeah.
nuclear alone over there. Yeah.
We should just have. You know what? Actually, well, I'll explain what's going on with the next year with the podcast as well, which is going to be sensational. Okay, this is from David Ingles. Early signs. I once called him David Ingles. Juliet Sarli corrected me pretty promptly about that one on Bloomberg Radio that time. Ingles. Early
Ingles.
signs. China stimulus may be starting to take effect. Ha!
Excellent.
Housing prices, which are still falling, fell by the least in about 1.5 years. So the housing prices are still falling, but they're falling less.
We've done it. We've done it. It's done.
It's China's solved. Get involved, kids.
Exactly.
The S&P 500, the SPX has reached. I don't know why I need to say SPX. The S&P 500 has reached its second most expensive valuation on a forward basis since 1999.
Hmm.
That was phenomenal. That was a couple of days ago, so it's probably still very much in that one. The Korean won is on the verge of falling to its weakest level against the US dollar since the global financial crisis. Korea's gone. Something's happened there. US equity ETFs and mutual funds have seen an inflow of 186 billion over the last 9 weeks, which is the largest inflow in history. Mike Zaccardi, CFA CMT, another session. Breadth has been. I've heard the word breadth, and I've had to make sure that I didn't. I did Hong Kong radio earlier in the week, and I was just like, don't say. Make sure you pronounce breadth, breadth, breadth,
Breath.
breadth. When you say a word so much, it
Yep.
loses all meaning. It was
Yeah,
breadth,
and you
breadth.
start questioning if you're saying it right, even though you know you're saying
And
it right. Yeah.
it's a word you don't want to slip up on either. So it's
No.
because you could say so and just like yeah. Um, the S&P. So that this is. I had to try and. I've got a desk assistant. He's amazing, and he's moving into an advisory role, and it's good. And because we don't really do in-depth stuff, it's a very simple sort of thing. Small steps, small steps, small steps. I was trying to explain breadth to him, and I was like, and I think I managed to do it. If I could explain it to him, then I could explain it to anyone. It's
Hmm.
the advances minus the decliners. The advanced
Yes.
decline percent,
Correct.
okay, is breadth. So
Mm.
it's negative, which means there's more decliners than advances. Go with me on this.
Yep.
So it was, now this is from the other day, negative all 11 trading days for the month of
Yeah.
December. And I don't know if it carried on for the next couple of days, but probably did. I don't know
Yeah.
how that's gone the last couple of days. Like I said, yesterday was our Christmas party. I'm not exactly sure what happened last night. It was all right. I was up hand feeding our dog because she's 17. She's really old. And so I went home. I'm looking after the dog, you know, hand feeding and watching Star Trek as I do last night. Anyway, that's just what you do. So, yeah, there's the breadth. So advanced decliners. Breadth is awful. Breadth is ugly at the moment. And then that's my details at the bottom there
That's
if
it.
you want to get
Yeah.
in contact with me.
You said you had charts. You had many charts. But
I do. I
yeah,
do.
yeah, on
I
that
do.
breadth sort of thing, I did see a chart. I don't have it on me, but it's sort of, you can see there's a pivot between the breadth on as soon as December starts. Tech is gone up like that, and the rest of the market's coming back down. But
Yeah.
obviously, last 2 days that's probably closed a little bit because tech has been hit hard. Obviously, because the more hawkish tilt from the Fed. But I'll just share my
Tilt.
screen again.
Go on.
Tilt, we love it. We love finance speak. There we go. Is it up? Yeah, there we go. Beautiful, beautiful. All right. So, what do we've talked about the yields. We talked about the markets overall. Copper still doing its thing, right on that trend line there. If China doesn't do something soon, then we could see a breakdown of copper. Copper worries me a little bit because every man and his dog saying copper, copper, copper in 25 is the way to go. But if every man and his dog saying it, they can't be on it because otherwise copper would be performing much better. But
This is what I keep
yeah,
on. It puzzles the heck
yeah,
out of me with this whole thing. Everyone's saying, and I'm sure that there is a very simple sort of thing. You get Rob Rennie on, and he's just like, "Oh no, this is why," and I
yeah,
really should talk to him about it. But it's just like if everyone knows that there is a copper shortage in the world going forward, and our generation and our children will our children will not know what it's like to have just copper pouring from the ceiling. You know, or you know what I mean? Like, okay,
but yeah,
it's there is a copper shortage. There's not enough copper to be able to wire what we need to wire. Everyone's seen that landman clip,
yeah.
which is doing the rounds. An amazing clip from Billy Bob. I was doing a bit of Billy Bob this week actually with Friday Night Lights. I watched Friday Night Lights
Oh,
on the weekend.
fantastic movie.
Great movie, mate.
Yep,
The one that he does about being perfect. I gave a similar speech to the team
yep,
here. It's
beautiful.
yeah, just if you can. Anyway, we'll get to that in a sec. But the copper, if this is the knownest known that there is about copper,
Yep,
why isn't the copper price performing? And that is a
exactly.
question. That is a question for 2025. We're gonna make
Yeah,
sure we get to the bottom of that. I'm sure the answer is very simple. Um,
exactly. And
that
it's probably something like, because I know China at the start of the year did build a lot of stockpiles in copper. Remember when it spiked back above, or up here, over here, it spiked back above $5 a pound. It was about 5.20 a pound. That's when China was building their inventories.
mm,
And they've still got, I think they've still got quite high inventories over there. I haven't checked the last few days, but yeah, I mean, and all the fundamentals like are there. You're seeing merger and acquisition stuff in the sector. You know, Rio selling off some of Winu, BHP taking over a couple of South American companies and made that big bid for Anglo that wasn't successful. You're seeing a lot of in the smallest end of the sector. So it's quite clear there isn't any new major copper mines coming online.
no,
They're all
everyone's talking about it.
existing. Yeah, it just baffles me a little bit. I mean, maybe it could be that there's the excess inventory in the system still needs to be worked through and whatever. But yeah, that's a 2025 question, I think.
Yep,
If
yep.
we could quickly move on to oil. I mean, it's real choppy down here. It's
You
really
do all. I'm
hard.
going to try and find a good NFL bet here.
Oil, I mean, you still got the situation where OPEC Plus have a lot of spare capacity. But again, if we look at this, I'm going to bring this chart up. This is Henry Hub gas. It's going vertical still. I think this is a sign to me that energy next year is going to do well. We're starting to see European and US gas stockpiles
Well, you've said it now.
really
What is it? What is
being
it? Henry Hub? Did you say?
yeah, this is natural gas futures, Henry Hub,
Yep. Yep.
$3.60 up from about $2. Big move the last 6 months,
Mm.
and it's all because of these stockpiles. They're being eaten into quicker than usual in the last 5 years, and they're going to be find it harder to replace, especially in Europe because more Russian gas is coming offline this year. So next winter is going to be even tougher for Europe if it's colder again, because obviously this is the first real cold winter we've had in the northern hemisphere for probably 3 or 4 years. I think they've gotten lucky over there since the Russian Ukraine invasion happened. So I think this is what sparks a bit of an energy bull run next year. It will flow through to oil and whatnot, and we'll, I don't think anything major because obviously there's that spare capacity everywhere. Um, but it will be a lot better than this year, I think, for oil next year. So keep an eye
Okay.
on that. Yep, yep.
Keep an eye on that
Um,
and the derivatives of that too. The best picks in the oil market for you. Stock pick of the stars, Heath
locally
Morris.
would be Woodside Energy. It's just
Woodside.
yep,
Good. All right.
WDS, easy one here in Australia. So yeah, so that's about it. I think the Russell, you can see the small caps there, absolutely obliterated along with the rest of the market. Again, high
I,
yields.
I got a good feeling for small caps. I got a really good feeling for small caps.
Yeah, so do I.
Quality smalls. Find
Yeah,
them.
yeah, yeah. What's that? What's the ETF? Oh, no, I normally know off the top.
QSML.
That's it. QSML, small
Just
caps,
guess.
but
That was
with
a
a
guess.
quality.
Pure guess. Okay. Is that
Small caps,
Global
but
X?
with a quality filter over the top of it.
Yeah. Which
That's
is
that's what you
difficult,
want.
difficult to find. Low leverage. Yikes.
Yep, yep. So
Low leverage, high ROI, and what was the
yeah,
third big
because
key thing that they've got?
60% of the Russell is unprofitable. Only 40% is profitable. So
Yeah,
you want to sort of filter that stuff out. But yeah, I
it's
like small
overrated.
caps. I think next year, this is my call for next year. The market has become too hawkish now in the immediate term. We start to see some softness in terms of Q4 data and Q1 data for the US, and we
Mm.
get back on the cut train, and they cut maybe once a quarter.
Okay.
So I think and equities will like that. Equities will like that, and the US dollar will soften as well. So that's my call for 2025.
Okay.
All right,
Okay.
beautiful.
No, football tips and then we'll go.
Footy tips, footy tips. What have I got for footy tips? I have lost my sheet. No, there it is. I've got the Steelers to cover the line versus away against the Ravens. The line's 6.5. Steelers doing well, but a few
Against the
injuries.
Ravens.
Yes, Ravens. Paying $1.86. The Steelers are well outsiders on that game for some reason. I think it's because of the injuries. But I think they'll cover that line. I think they're a sneaky chance to win, but I'm not confident enough to say they'll win. So cover the
What
line
have
of
they
six
got?
and a
Six
half.
and a half. Yeah, so a
Yeah,
touchdown, just over a touchdown.
yeah,
Okay.
yeah, yeah. So
Yeah.
that's my call.
Okay. I think I'm just going to keep it safe this time. I think that, I mean, I love my Vikings. They're not my
Yep.
Vikings, but, I do love those Vikings. If I was going to pick a team, that'd be my team.
Mm-hmm.
Instead, I've gone from the Saints, the New Orleans Saints, over to, and I'm supporting the Las Vegas Raiders this year. I'm not sure how much worse it could possibly get for me, but anyway, no, the Vikings at the $1.65. Just take the easy, just take them on the line.
Yep. Beautiful.
$1.65. You can't go far wrong
Who
doing
they
that, mate.
playing? Who they playing?
Against the Seattle Seahawks.
Oh, that'll be a good game.
Seahawks have been sketchy, but that's it. We are getting to the business end. I got beaten by Robbie Farah in the first round of the finals in the fantasy comp.
Oh,
And so
mate,
he goes through, and I'll just say who's left here. So Faf beat me.
I'm playing Jai. So
Jai is my partner in crime here.
I'm screwed.
He's
I've had my number one running back Montgomery. He's out for the season. Backup Nick Chubb out for the season, and I've got a questionable against one of my other running backs as well.
Pollard is questionable. Brown
Yep.
is questionable. Mate,
Yep.
have you got?
I'm
Do
stuffed.
you
I've got
do you have any
backups, but
players?
they're
Do you
not.
have any players left here?
I've got backups, but they're not high scoring backups. I need a miracle to win this week to advance to the grand final. I think I'm done.
There's been a few miracles. So amazing, Tessa, who I work with here as well. She was taking on Jai, who's her business partner as well in the event side. She was 99% with a few minutes left in the last game on Tuesday,
Yep.
and switched completely around.
Oh,
There was
no.
one interception that completely and it was just phenomenal. It was just like she was doing a victory lap, 99%. I've got this in the bag. I said, you are home and hosed. Congratulations, you've won it.
Oh, the wheel and
Good.
curse.
Oh yeah, mate. The black cloud moved over that bad boy. No problem at all. Completely switched.
Oh,
One
God.
interception. I think it was a pick six or something like that. One interception. That was the points. Jai got up, moved to 99%, switched around just in the last few minutes of that game.
Wow.
Incredible. That is fantasy football at its finest, my friends.
It is.
Heath, it has been a hell of a year, mate. I love what we have managed to do together.
It's been fun. It's been great.
It has been fun. Next year, now just keep it down, keep it low down. I want to give you the details. Big show. This
Big
is the
show.
way I describe. Big show is what we're moving it to. It's going to be uh, monthly. There's going to be more variety. There's going to
Yep.
be the guests are going to be on, so that each show will be bigger, more packed, more
Hmm.
detailed data, more YouTube friendly.
Hmm.
And I can't wait. Just stop sharing so that we just you and I talking here. Hang on. Did you want to? Yeah. So
I'll
we're
stop sharing. Sorry.
yeah. It's yeah. I'm really looking forward to what it is that we've got ahead, mate. So
Fantastic.
it's and thank you for joining me on that one. It's I do believe that Global X is going to be partnering with us on getting that done as
Fantastic.
well. It's going to be more for advisors, more for high net wealth clients and people that want to know a little bit about the market as well. So it's going to be in there, but there's going to be a lot of stuff about us working in this industry and what we do. So I'm going to
Yep.
work with Ensemble. I'm going to work with Ensemble as well to see what we can do to slot ourselves in with that too. Because I'm very good friends with them and they've
Yep.
got that advisor network, which is really which is it's strong and I want it to be stronger.
Hmm. They put on great. I was at their P, well, not at there, but did their PD day last month.
The
They do a
LPD day, yeah,
fantastic job for the industry. It's
yeah,
yeah, gave me an easy
yeah. I'm
nine
sure yeah.
hours.
Yeah,
So
I've
yeah.
got to log mine as well. I
Mm.
spoke when I spoke at that last year,
Yes, you
and I
did. Yeah.
and
Yep.
remember because I was on the dead man's watch.
Yep.
The last line was just like, I'm just going to try and stop you all from logging out. I'm just going to tell you some yarns.
Yep.
Nothing. It's just like I can either do super returns. Yes, you've had 4.9% returns if you have allocate into a more conservative, or I could tell you that woman that was running the Ponzi scheme is not dead. And everyone's just like, oh, yarns. Yes, hit it up, James. Go nuts. And so everyone stuck around and it was good. There was half people just like, this guy is just insane. And there were half people who were just like, this guy's telling it like it is. It was hilarious. Um, that was great. Anyway, so thanks very much to the ensemble. Well, I'm sure that they'll be on board, but we'll go. I don't have any commitment to that. But next year is going to be a lot of fun. So we'll take a little break here now, mate, and
Yep.
get ourselves set.
Hmm.
It's going to be huge. Okay, mate.
All right. Beautiful. Fantastic. Just want to say Merry Christmas to our listeners. Stay safe. Look after yourselves. But
Yes, to the three of
enjoy.
you, thank you for helping us out this year.
Have a great Christmas and New Year, everyone, and look after yourselves. Stay safe as well. It's important this time of the year, unfortunately. So yeah,
Too true.
but yeah,
Okay, mate. I'll talk to you later. I'm going to go and crack open a beer, go and watch the football, and get on with it, mate. The day is done. We've actually got a couple of orders to put into the market first, so that's always the way. And I've selflessly put myself forward as being the guy who's managing and monitoring that stuff over the break, so that the kids can have some time with their families or to do whatever it is they need to do. That's such get off the cross. We need the wood. Not all heroes wear capes, my friend.
no, they
Anyway,
don't.
thanks, guys. I'll talk to you later. Have a good one.
Have a good one. See ya. Bye.